Hey everybody, Jason here. Happy Tuesday. Hope you guys are all having a great day. So today, did I do anything? I think I opened up some more put credit spreads on Tesla, with it being down a little bit. And we did get to rolling out our Tesla put credit spreads from yesterday. So I opened those up in a myriad of expirations and strike prices. We can take a look. Oh, and we did open up this SPY 422, 421, $8 out of the money. And this is Stones. That's his username, or Raul. This is his play. Basically, I'm copying it, but I like it. So these are 9 of them, and he does 90 that I sold today. Collected $9 a piece credit. Put in a good till closed order of $1, so that'll be a $72 gain as soon as this does close. So not bad returns for, well, a couple hours at this point, but they are expiring tomorrow. So unless we have a major downness, those will be nice and profitable. And other than that, let's see, you can take a look at what we do have expiring now for Tesla and our put credit spreads. These ones expiring next Friday. We're down a little bit on some of them. Looks like, yeah, 775. That's kind of what I was figuring. It definitely is closed a couple times at that 775 level. It likes it. So it could have squeezed a few more dollars out of it if I would have waited a little bit, but don't always have time to open them up at the ideal points. So we have some 730s, 740s, all expiring next Friday. And I don't remember which ones I opened today or yesterday, which ones I rolled to. But now you can see we have some 730s. Probably did these, I would have kind of assumed today, maybe yesterday, since we're down a little bit. But 730s, 700s, 710s. Couple 745s, getting a little bit more aggressive on those. I think those we collected about $100 a piece, now up 113. Some 750s. So you can see all what we have expiring coming up. I have pretty high confidence. We're not going to see too much down. I think with Tesla right now, and just taking a look at it. As soon as this populates, I think we had this range here. I mean, we did have this range here, and this is where we had the little pop-up. So now I think we'll probably see a little bit more consolidation somewhere within here before we see the next leg up. The next leg up could be coming, I think, just prior to earnings, where it'll probably run up and then a reaction afterwards, depending on how what kind of news we get at earnings. So I was looking at that pop-up level 770, 760. So I think that's where we could come down to again, and I believe that we'll just stay in that range for a little bit. So that is fine, but happy with all of our positions there. And we are, I mean, compared to that 770 or 760s, I mean, we're pretty close to up there, but I don't see a major dip back down below that. Another thing, the comments. I swear before I got a notification for every single comment that I got, so I was able to answer them. And now I'm going back and looking at some of them, realized I'd never seen them, and I hate to not answer you guys when you have questions, especially when it's something timely. So I'm going to jump over into that right now and make sure everything is answered. All right, so let's make sure. Okay, even though I responded to a couples just yesterday, the Roku is so trash. Yeah, I did reply to this. And my experience with Roku is I have a very cheap TV, and it's like a no-name brand, has Roku, and that thing functions super good. And I have a very big, expensive South Korean name brand TV, and that thing is not nearly as snappy or user-friendly as Roku. So that's my limited experience with Roku. Why Robinhood? I did respond to that, but the question, I wasn't sure exactly what it meant. Like, why do I care to sell it? Why did I buy more? I bought more because it's pretty near IPO price, pretty near the lows. And since we had such a down day on the overall market yesterday, I thought it'd be a pretty good time to purchase it, and then immediately sold to cover calls. And the reason I don't mind if I lose that stock, it was just kind of a reevaluation of things. And yes, I use it. Yes, I do believe it is good to own companies that you use. But I don't love Robinhood, even though I do use it all the time. It's not a company like that that I think is going to 3x change the world, things like that. I don't love it. I like it. I don't love it. And I really want to own things for a good reason. And just because I use it isn't that reason for me. So if that stuff goes away, that's fine. That's just more capital to sell, put credit spreads on Tesla, or purchase the stock, which it's not going to be a whole lot of years. It's going to be, a few years where Tesla stock is doubled 4x, something like that. So I'd just rather own the stock, rather put my money over in Tesla, or rather use my money for put credit spreads and that pretty consistent profit that I've been seeing with them. Great video. Yeah, I don't like Biden at all. Sleepy Joe needs to go. Voted for Trump twice and will vote again. Enjoyed having Trump around even before he became president. I was agreeing with you on just having Tesla and then doing the plays as well as keep the other plays in a different broker. Yep. I concur. I enjoyed having him as president as well. Actually, like one of my favorite things was his Comedy Central roast that they did on Trump. That was pretty good. I went back and watched that, I think a year or two ago. That was pretty good. And it's also, even though, there's whatever, half the population, 60-70% that doesn't like Trump, on some level you have to enjoy his speeches or the way he speaks. Like, I don't know, agreeing with him or not. Kind of like, like listening to Reagan, even though he was a lot more kind to everybody. I go back and listen to some of his stuff, and just the way he speaks compared to the way anybody speaks today, it's so much better. I actually enjoy it. Great video as always. Any thoughts on selling cash secured puts on Facebook, strike and expiration? Obviously now, that would have been timely and wonderful yesterday. And now we have, hindsight is 2020, obviously with Facebook going back up. I think at the money would have been great, obviously, and that's easy to say now, but, even if it were to go below that, you got assigned and you needed to sell covered calls to get rid of them or whatever you wanted to do. I know you do that for income. The thing that we have to look back on is when we were actually speaking of Joe Biden and Trump, when we were going through all the presidential election stuff, and there were some, bad news about, Facebook and Twitter and everything, and they kind of took a little bit of a pullback from those things. That's pretty similar to what's happening right now with the whistleblowing. That was very short-lived. And at the end of the day, if you're buying the stock to make money, everything that they're blowing whistles about and everything that's bad is good for profit, which is good for the stock price, etc. I don't think a whole lot of people are I don't think the majority of people invest in the company for morality's sake. So I think whatever dip happened, I don't think it's going to be very long before we're probably right back to where we were and then continue up. Great video, and thanks for replying to questions, of course, when I don't. Oh, this is Debbie. You said you opened up a few short-term Tesla spreads. I know you usually do 4 to 6 weeks away, and you also do some that are 1 to 2 weeks away. Also, is there an advantage to rolling out a spread that already has some profits versus just closing it and opening up a new one? Tesla was the only thing green today for me, so I see what you're saying. So let's see. You're very welcome. And I think you emailed me back again, and I think you were looking at the difference between opening up a $20 $20 vertical versus a $5, like $4 or $5 verticals. Unless the bid ask is so crazy down there and maybe illiquid, because I know you sell them super far out of the money, you're most likely to be more profitable doing the $5 wide spreads and selling 4 of them rather than one $20 spread. And your risk is going to be very, very similar. I mean, I know they were down at the lower 500, and so I mean, if we're all the way down there, your risk is kind of the same in my mind. Let's see. Also, do you do some? Oh, yeah. So 4 to 6 weeks away is correct statistically, but I will do some just 1 to 2 weeks away. I'll open them up after I've seen a drop, and I'll do them pretty close to the money because I feel as though I've seen what drop was going to happen. So, like when the NHTSA investigation came out, I think I saw the market's reaction. I mean, we did see the market's reaction, but I didn't think that was going to be continued move down. I didn't think that affected the core fundamentals of the company or any long-term outlook. So based on that, that's why I didn't. That's why I did open them up more near term than farther out. Farther out, it could be overall market sentiment. You know, all kinds of crazy things could happen where it kind of drifts down slowly. But when there's a sharp move like that, premium is higher, and that's what I'm taking advantage of there. Hopefully that makes sense. I mean, you could open one up far out at those same strike prices, but that's where I feel most confident and comfortable. Is there an advantage to rolling a credit spread out versus closing and opening up a new one? No. It's just, it allows you to do it all in one play, which that's the reason that I do it, and kind of a placeholder with the underlying price for me. It only takes a few seconds, so a lot of those I just try to get done quickly, so it's a little bit quicker depending on your brokerage. I don't know if they have different fees for one transaction being rolling as opposed to separate fees for closing and opening up a new one. That may take there may be some accounting for that, and then the differences between bid and ask price, maybe you're able to fudge a little bit there because you're able to pay, you know, a percentage of that dollar to close one and a percentage to open up a new one. I don't know. But essentially, like at the end of the day, it's pretty much exactly the same thing. And thanks for the awesome videos. Do you think this $137 million lawsuit will affect strike or stock price? No. Have a few credit spreads closing Friday. It looks safe. 685, 690. Not sure if I should roll up when I roll out. So, no, I don't think that's going to be an effect on it. I think $137 million is a drop in the bucket for Tesla. And that wouldn't matter one way or the other. And whether you want to roll up when you roll out is completely up to you. I mean, it's all about risk tolerance. I mean, I feel those are pretty safe. You can see what I'm doing. I do have some a little bit lower, some a little bit higher. 690 is fantastic. I think when you get up to the, I think 620s, 630s, I think that's a good balance between risk to reward there. And I think when you get to the 750s, I think that is where you're gaining quite a bit of premium, but a little bit more aggressive. And depends where your comfort is too. Like if it drops a little bit, are you uncomfortable with that? So we could drop down to 750 for me, and I feel confident and comfortable with that's probably a temporary move. And with earnings coming up, that's a pretty big positive to me. And also being able to just roll them out at any point. And this I would have, like, personally, I definitely would roll that out sooner than later. There's probably not very many dollars for you to collect at this point, and you might as well get something else out there where you're collecting on that extrinsic value. So that's something I would look at doing. To me, Tesla's just nuts. Like every time I think about it, and the stock is only $700 or $800, and the way that they are growing, like they're They are building batteries as fast as they can. They're building cars as fast as they can. They're building the factories to build the cars and the batteries as fast as they can across the entire world. The amount of money they're putting into R&D and research and making the stuff more efficient. They're getting more efficient, more profitable. As scales of economies go, everything is like just lowering their cost of producing everything. So their margin is getting larger and larger, and they're still like, they're sold out for 6 months on most vehicles. That's insane. And their demand is just, it's going to keep going up there. And if they ever meet a point where they're meeting demand, they have so much room now to lower prices and continue to be massively profitable. So, and that's not their energy business, their solar business, like any of that, their robot. They still have vehicles that they're going to be coming out with. They still have a couple different trucks in the mix. Just everything about them. I mean, it's growth. So as long as you're opening up something, even if it's more aggressive and we have some pullback, there's no question in my mind, if you need to, you roll it out a month, 2 months, 6 months, a year, whatever, that'll ultimately be a profitable trade. But all right. Well, I'm sorry for the delay of getting questions answered. I'll probably look through, make sure there's nothing else. I think I did go through and get to most of them. See, oh, look at here. See, I didn't get to these either a couple days ago. I feel bad. Other than not waiting for the last 20% and rolling out your position, is there any other reason, like tax or anything? No. Or is it strictly not waiting because that money is more useful somewhere else? Yes, that money is more useful somewhere else, and just the last day or two, if I want to be able to open up another position, I would rather have that capital available to be able to make those moves, right? Like, so for example, today where everything moved down, if I hadn't have rolled out my other put credit spreads and collected a couple $1,000s, I wouldn't have the capital to be able to do that. What was the other one I did see? You typically close or roll your spreads before expiration. Yes, I do. I typically do it the Friday before expiration. That is typical. Yes. And I think we went over this. Why are my credit spreads negative if I have not touched my strike? Because they will go negative even when it goes down. Just like on, let's see, I'm sure we can find some negatives. We haven't hit 730, but we're down $20 just because now it costs more to close this than it did when I opened it. So it just costs more to close than what I got paid to open it. If we can get this populated, which maybe we can't. There we go. So we got $58 to open this. Now it costs $65 to close it because Tesla's going down, or has gone down a bit. So that'll happen. But all in all, if it never goes down below 730 at expiration, you keep all of it. You won 100%. All right, guys, that is it for today. I will try to do better on checking those notifications to make sure I get all your questions answered. If not, if I don't get to you, please keep bugging me. All right, love you guys. Let's make a lot of money.